Dear excited, enthusiastic SpaceX investors, the historic SpaceX public offering, you're being told, is a once-in-a-generation opportunity to buy the permanent future of civilization, a vertical monopoly over launch, global orbit, and space-based intelligence that commands an immediate, unrestricted, all-in capital approach. That's what they say, anyway. But there's a fracture in that way of thinking. The crowd mistakes a massive institutional liquidity event for a wealth generation engine. By engineering rapid entry rules into passive indices, the architects of this offering are converting public retirement funds into non-voting, capital-absorbing shields for an asset burning billions, literally, in the ether. But back here on Earth, some of us have to be sober. Reality dictates that the larger the colossus, the more desperate its hunger for subordinate tribute. And I realize I put out content that say precisely the opposite of this, even in the past 2 weeks. The global collective is hypnotized by the impending listing of the world's first multi-trillion-dollar aerospace vehicle. The masses view the prospectus as a covenant with destiny, an absolute convergence of orbital dominance and synthetic intelligence. Yet the architecture of leverage demands that we look past the spectacular ascent of the rocket and focus on the violent reallocation of systemic risk occurring beneath it in the indices. You see, this public offering is not an invitation to share in the conquest of an empire or the overcoming of an entire galaxy. It is a clinical mechanism designed to transfer unprecedented capital expenditures onto the passive public. We are witnessing a profound structural inversion by rewriting index governance to force automated exchange-traded funds into buying shares within weeks of the listing. The sovereign operators have solved the ultimate dilemma of scale. They have turned the entire global retail clientele into a captive capital vortex. And I see a few shifts happening. First is the ephemeral shift. The enterprise conquered the physical world through heavy, sweaty engineering, reusable iron, and global satellite constellations. Yet the public books reveal an aggressive pivot to the ethereal. Tens of billions diverted into synthetic intelligence networks. This is the classic hubris of the conqueror, abandoning the profitable reality of hard infrastructure to subsidize the hyper-speculative margins of the cloud. It is he who abandons the supply lines once he gets close enough to Rome. And there, he dies in the trenches. Then there's the asymmetric vulnerability. To allocate entire portfolios at a $1.7 trillion valuation while the enterprise sustains multi-billion-dollar losses is to mistake an active battlefield for a settled colony, to mistake Rome for a tent in the desert. The liquidity being raised is not an offensive war chest. It is a defensive wall against the accelerating, compounding costs of a multi-front technology war. And there's an ancient parallel here sitting dormant. When the emperors of antiquity minted coin to fund far-flung expeditions to unmapped horizons, it was the citizens at the center who absorbed the dilution while the generals retained the spoils. The governance of this vehicle ensures absolute sovereign control remains concentrated in a singular entity, no, a singular mind, while the public carries the weight of the vacuum and the inflation. True psychological arbitrage requires you to step back when the theater is at its most deafening. Do not let the forced demand of index inclusion dictate your capital defense. The crowd believes they are buying a ticket to Mars, but reality, well, reality dictates they are merely financing the fuel to get others there.